Okay, here's a live look at the Dow this morning. Things are actually looking pretty good. It's up 569 points right now. President Trump also talked about the stock market this morning. He says it's, quote, stronger than ever before because of tariffs. CBS News Money Watch correspondent Kelly O'Grady is live at the New York Stock Exchange, and she joins us right now. Okay, Kelly, the president says the stock market is booming, but is there cause to be concerned given this new announcement on Canada?
Well, look, investors don't seem to think so today. Like you said, I mean, the stock market up close to 600 points. That's over 1% on the Dow right now. I mean, of course, that's more because investors are reacting to the inflation report, which I know we'll talk about in a second. But if you go back to the last big moment where we saw a dip from investors when it came to tariffs, it was all about China. So the investors and analysts that I spoke to this morning said, like, look, if we were to end up in a situation down the road where we aren't trading with Canada and there's really high tariffs, yes, that would be cause for concern. But we've seen this back and forth happen over and over, Mugo, especially when it comes, to the Premier of Ontario. There's been a lot of back and forth between him and Trump over the past few months. Yeah. I think the bigger thing where you could see concern, Willie mentioned that USMCA trade agreement that is up for renegotiation in 2026. If we see going towards that moment, there could be a bigger blow up between these three countries. Of course, Mexico and Canada being a very pivotal two countries that we trade with. That is where I think you'd see a bigger reaction from investors. At this point, I think a lot of folks are just used to the back and forth tit for tat.
Oh, yeah, certainly seems like it. All right, Kelly, you said we will talk about inflation. We've got a new read on it. What can you tell us?
So inflation, the annual rate from the Consumer Price Index ticked up to 3.0%. That's the first time we've seen a 3 in that number, that annual number, since January. So we're moving away from the Federal Reserve's 2% target. The good news, though, the reason why you are seeing very much green on the screen across all the major indices is because we expected it to be a little bit higher. We expected 3.1%. So it's kind of like, okay, it's going in the wrong direction, but it's not as bad as it could be. And that's why you're seeing that relief from investors. And if you go through line by line, you're really seeing areas like utility gas, like think about going into the winter, people are heating their homes, that's spiking. Some areas you're seeing pressure from tariffs, like apparel and furniture, but we haven't seen that runaway inflation that people have been concerned about. So you think about this being the last piece of data, the only piece of data likely that the Fed is going to look at next week when they make that interest rate decision. You're seeing reaction from investors because they're also expecting a quarter-point interest rate cut based on the data today, Mugo.
Okay, Kelly O'Grady, as always, thank you for helping us make sense of all this. Appreciate your time.